Hey everyone, welcome back to Corporate Decoder. Today we are diving into Starwood Property Trust's latest filing. It's like finding out your neighbour is borrowing money to pay off other debts. That's the gist of what we're looking at, but with bigger numbers and fancier terms. In short, they are trying to raise cash in a private offering, scrolling to states, courtiers and exchange. Come and scroll. Starwood Property Trust filed a report with the Securities and Exchange Commission, or SEC, on March 25th, 2025. This report is called an 8K, which companies use to announce big news to investors. The main point of this filing is that Starwood Property Trust is planning to offer $400 million in what's called unsecured senior notes due in 2030. Think of these notes as IOUs, or promises to pay back money that the company is selling to investors. They are unsecured, meaning they aren't backed by any specific asset. If the company can't pay, the note holders just become regular creditors. So, what's the plan for all this cash? Well, Starwood wants to use the money for what they call eligible green and or social projects. Basically, initiatives that are good for the environment or society. They might use the money to pay for these projects that they've already done or ones they plan to do in the future. If they've already done or ones they plan to do in the future, if they've already spent money on these projects, they can use the new funds to pay back other debts. While they are waiting to allocate the money to these projects, the company intends to use the net proceeds for general corporate purposes, which may include the repayment of outstanding indebtedness under the company's repurchase facilities. In plain speak, that means they will pay off other loans they have. Scroll only to persons reasonably can believe to be qualified institutional buyers in reliance on Rule 144A scroll. 6, the Bureau start being offered in a private sale, meaning it's not open to just anyone. It's aimed at big, experienced investors, often called qualified institutional buyers or non-US persons. Because of these restrictions, the notes won't be initially registered with the Securities and Exchange Commission, or SEC, so there are rules about who can buy and sell them. Now let's take a quick peek at the exhibits attached to this report. Exhibit 99.1 is a press release that Starwood put out on March 25, 2025 about this whole note offering tonneau. Let's size up Starwood. Starwood is going out to get another $400 million. Why? The answer is unclear, but we know they will either pay off old debt that they owe, invest in future social projects, or use it for general purposes. A mixed use of funds, but a potential sign that the company is undergoing some growing pains. From the company's point of view, this is a way to raise money without giving up ownership like they would if they sold stock. It also lets them invest in projects that might improve their image and help them attract socially conscious investors. But there are downsides. Taking on more debt increases the company's financial risk. If Starwood's business hits a rough patch, it might struggle to make those debt payments. Also, if the green and social projects don't pan out as expected, it could lead to criticism and might not deliver the financial returns they're hoping for. Overall, Starwood's move to issue these notes shows that they're actively managing their finances and looking for ways to grow. But it also comes with risks that investors should keep in mind. The success of this strategy will depend on how well they manage the debt and how effectively they use the funds to boost their business. Thanks for watching. If you found this helpful, give us a like, drop a comment and subscribe for more financial deep dives.